Hello everyone, I'm Monika Yadav and welcome back to Business Unboxed. Today, I want to talk to you about something that affects us all, the Goods and Services Tax or GST. Specifically, I want to explain why we need to think about making GST rates simpler and fairer. This is what we call GST rate rationalization. GST is a tax we pay on most goods and services we buy. It helps the government collect revenue to provide us with public services like roads, schools, and hospitals. Right now, GST has multiple tax rates: 0%, 5%, 12%, 18%, and 28%. This can be confusing for everyone, from shopkeepers to consumers. It makes it harder for businesses to price their products correctly and can lead to higher costs for us, the consumers. So why do we need to rationalize these rates? A simple tax structure means fewer rates to remember. If we reduce the number of tax slabs, it will be easier for everyone to understand how much tax they are paying. Some essential goods are currently taxed at higher rates, making them more expensive. Rationalizing the rates can ensure that basic necessities are more affordable for everyone. Finance Minister Nirmala Sitharaman had recently said that the government wants to put all the essential commodities under the lowest tax bracket. When the tax system is simpler, businesses are more likely to comply. This means more businesses will pay their taxes, which can help the government collect more revenue without raising rates. Lower and more uniform tax rates can encourage spending and investment, helping the economy grow. When people spend less on taxes, they have more money to spend on goods and services. FM Sitharaman earlier this month at an event had said that the current average GST rate of 12.2% is significantly lower than the revenue neutral rate of 15.3%. Despite the lower GST rate, the revenue is equal to what it was in pre-GST regime. Hence, the government has an elbow room to decrease rates on some goods and services. The revenue neutral rate is the rate of tax at which the government collects the same amount of revenue even after changes in tax laws. Now let's talk about the recent group of ministers meeting which took place on September 25 to discuss rate rationalization. Let's break down the key points from their recent discussions. The GoM focused on discussing the GST rates for 85% of the items under the GST. Finance Minister of West Bengal, Chandrima Bhattacharya, who is part of the GoM, announced some significant decisions. The consensus was clear: goods and services that are essential for everyday people should have lower GST rates. One of the major outcomes of the meeting is the decision to reduce the GST rate on education-related materials like exercise books and pencils from 12% to just 5%. This change is expected to offer much-needed financial relief to families, making educational resources more accessible for children. On the flip side, the meeting also brought up a controversial proposal to increase the tax rate on apparel priced above rupees 1,000 from 12% to 18%. In an interaction with our newspaper, Bhattacharya said that she strongly opposed this idea, arguing that it would negatively impact common citizens and the textile industry, which provides jobs for many women in West Bengal. Moving on to health and life insurance premiums, discussions remain unresolved. The current GST rate on these premiums is 18%, and the GoM plans to revisit this issue in the next meeting scheduled for October 19 with a follow-up on October 20. Bhattacharya noted that all states agreed that the common people should not suffer due to any rate increases. However, they also expressed concerns about ensuring that their revenue is not affected. Sources from the meeting shared that the central government wants to shift several items from 18% to 12%. However, states not ruled by the BJP, along with some northeastern states, are hesitant, fearing it could hurt their revenues. For example, there was a proposal to bring air conditioners down from 28% to 18%, but many opposition-led states were against it. Under GST, essential items are either exempted or taxed at the lowest slab, while luxury and demerit items attract the highest slab. Luxury and sin goods attract cess on top of the highest 28% slab. So, what do you think about these proposed changes to GST rates? Will reducing rates on essential items benefit everyday citizens? And how will the proposed tax increases impact the economy? Share your thoughts in the comments below. Don't forget to like, subscribe, and hit the notification bell for more updates on this and other important topics. Thanks for watching.